Hey there, everybody. My name is John Lillywhite, and with me I have, how do you want to be called? JaLynn Manser or Shaw?
JaLynn Manser-Shaw. Hey everyone. Hey John, how's
Hi
it
there.
going?
And this is Expert Opinions Podcast. What I try to do here is I bring in people who are badasses at what they do. And when I say experts, these people, they're experts. And JaLynn is truly an expert. It's something that if you are wanting to buy a home, and for some reason, there's a life experience that's going on and that you can't, whether it's you don't have the money or whether there's a bad credit score. Uh, just life can throw a bunch of things at you that make it impossible for you to buy, and then you're forced to rent. There are opportunities out there to where you can take advantage of these lease to own options. There is nobody that I know, and I know a lot of people who know less about this than JaLynn. She is an expert. She knows everything about these lease to own, which is why I wanted to bring her in. She will talk a little bit about some of the other coaching techniques that she has so that we can elevate the knowledge of this to some of the other agents that are out there that want to take advantage of it. So with that said, I just wanted to introduce JaLynn and give her a couple minutes. If she could, please tell us about yourself, JaLynn, and why it is that people should be listening to you when it comes to this kind of thing. All right. So I'm going to shut up and let you go.
Oh, thanks, John. I appreciate that. So, yes, I am definitely the market authority when it comes to lease options. A lot of people call it a rent to own. That gets kind of a bad rep out there, by the way.
Mm.
But so we work, my team and I, we work a legitimate lease option program. There are so many people out there who might be desperate to get into a home, but they just really don't have their act together, whether it's their credit score is a little bit low, they just don't have the down payment saved up. And so doing a lease option really does give them the ability to get into that home now that they want to live in, rent it for a while. The rent is going to be pretty similar to market rate rent. It's not super elevated. They can take the time that they need to work on that credit score, save up that down payment. And when they're ready, come back to you or whoever their lender is that they're working with and pull the trigger and buy that home. So it really does give them a lot of flexibility. There's no obligation, there's no penalty, there's literally zero risk. It's a win-win for all parties, honestly. That's like my short answer.
Now you claim that you can substantially increase, or you personally have substantially increased your revenue and your business, and you've put lots and lots of people into houses. I can attest to that because I've been the financier, the mortgage person when these people finally buy their houses. And it's a totally cool thing to see people do this. But on your end, talk to me about the revenue generation opportunity that you're seeing for these people outside the fact that you're super cool and putting people into houses.
So, on the realtor side, if you are a real estate agent utilizing one of these companies to increase your business because you are representing the respective buyer, whether it's HPA or Divvy or Trio or Pathway, whatever company it is, you get paid as the buyer's agent. So,
Hmm.
whatever that full sales commission is that's listed in your respective MLS, that's what you get paid when the home closes escrow. You don't need to wait for the resident to move in. You don't need to wait for them to exercise their option. You literally get paid when the respective company buys the house. As long as your file is clear with your broker, you get paid immediately. So that's the really cool thing. And last year alone, with just one of the companies that we work with, I did 55 transactions in 2022. And as a result, I did win a trip to San Diego with
I
HPA.
remember that.
Yeah, really awesome. I thought I was the number one agent in the nation. I was the number two agent in the nation, the number one agent. Yeah, he sold 77 deals last year. He lives in Albuquerque, New Mexico. And I'm like, okay, I'm going to beat him this year. Just watch me.
I have no doubt. I know you will do that. So you had 55 transactions, standard sales, representing one of
Yes.
these lease to own companies who purchased the property cash. right? I mean, these companies,
Yes.
they don't need any kind of mortgage. They've got the cash. That's how they make their money.
Correct.
And they own the property, and the people who were in the lease to own opportunities, they moved into those places. Now, at that point, when those properties are then sold, whether it's sold to the person who is leasing it, and there's not a requirement there. We'll kind of get into that. Is that right? There's no requirement that they must buy that property. If they don't like it, they can move, right?
Absolutely.
Okay.
There's no obligation if they decide, 30 days after they move in, a year, 2 years, 3 years, however long it is, if they don't like the house, they don't like the neighborhood, they can certainly put in their notice, get their security deposit back, and they can go either rent another house down the street or they can choose to buy another house down the street, depending on, what it is exactly that they're looking at. And the beautiful thing too about the lease options is a lot of people ask me, well, what happens if the market crashes? So that's one of the things, because what if the home is worth $30,000 less than what your option price is? Well, guess what? There's no obligation. You can walk away, get your deposit back. Conversely, if the home does appreciate in value and it's worth $50,000 more than your option price, guess what? That's just how much you have gained in equity and appreciation just from renting. So it truly is a win-win.
We had a client, you and I did. You referred me, thank you, to this client who had purchased 5 year or entered into a lease option to buy 5 years ago. Remember? When
Correct.
we
Yes.
got the appraisal back, the appraisal was, oh, JaLynn, I want to say it was like $50,000 more than what
Wasn't
the
it like
offer price.
140?
Oh, you know what?
It
You're
was
right. I'm
it was
thinking it
like
completely. It was
140.
huge. It was ridiculously huge. And that I think
Yeah,
tends to happen more often than not, because when you look at what the buy option is, it's I don't want to be stuck on these numbers, but it was like between 3.5% and 5.5% per year. Well, we know that there are some
correct.
places, some pockets where it's appreciating a heck of a lot more than that. So yeah,
Yeah, it's
the opportunity was crazy.
crazy.
I love that.
Yeah, like my husband and I got in fortunately in Phoenix when HPA started buying homes there 2 years ago. They got a house for us for 350, and at that point in time our option price was 367 400. When we bought it, we put it in our names. The appraisal came in at $538,000. So we had
No.
$170,000 in equities from renting,
Oh
which was
my God.
insane.
Well, I
Like,
mean, that's one of those things that you can't expect, right? And you can anticipate it, and there's enough data points out there to show that that is a possibility. I've seen it a couple times. JaLynn's seen it numbers of times, but we also don't want to say that's one of the reasons you want to do it, so that you can turn around and you can be promised this unbelievable equity by the time that you sell it or by the time you buy it. But it
exactly.
does happen.
Exactly.
I won't.
There's no guarantee. Absolutely.
No, and but I do want to reverse a little bit, because you had said something about if you don't like the house, and there's a number of reasons why you might not like a house that you've rented. It could be dogs, it could be traffic, it could be neighbors, it could be countless things that you don't like about it. So there's the whole benefit of test driving your house before you actually buy it. And I like that idea, because when you move into a house, you really don't know the idiosyncrasies of the geography, your neighbors. There's all kinds of things that could keep you to say, nope, 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 we don't want this. And then you're able to back out as well without having any commitment whatsoever there. And I like that idea.
Exactly. Exactly. And if you're going to be renting anyway, I would say, why not rent with purpose? Like, wouldn't it be
Exactly.
fabulous? Yeah, if you did rent the home for, let's say, a couple of years, and wouldn't it be a tragedy if you had gotten to the end of your lease term and you decided you really loved the home, you wanted to stay there, but you couldn't because the landlord was going to sell the house or move
Yep.
his mother-in-law back in. Guess what? Nobody's going to sell the house out from underneath you unless
Nope.
it's to you if you're in this lease option program.
And I think that that's a really important other element that one might want to use when they consider such a strategy. All right, whether you're renting with a purpose, when your purpose and intention is to purchase that property, or you want to buy a property, You have the down payment. Your FICO scores are fine, right? You have all that stuff. Your income qualification is there, but you just want to be able to rent, to buy with, you want to test drive your house. I think that that is going to be far more of a benefit as well. Do you have any history of any people that bought for that reason, JaLynn?
They bought just because they just, I mean, could you ask it again? I'm sorry. They
Yeah,
bought
I'm
just
I'm
because
interested.
they,
Do you have any of your clients who bought with the so that they could test drive their house specifically? They had everything, the criteria they were going to buy. They just decided to use an HPA type of a program instead of just buying something so that they could test drive their house.
yes, absolutely. We
Okay.
have, for instance, people relocating to Phoenix is a very good reason to
Oh,
get into
there
a
you go.
lease option because they truly don't know any of the areas. They don't know where they want to land. And so this gives them the opportunity to rent someplace and they can drive around, check out the other communities, and determine where it is they truly do want to live.
What a trip. Very cool. All right. So before this podcast happened, JaLynn and I were talking about not wanting to give a whole bunch of BS and hype. Yes, this is a program that has legitimacy. You're talking to somebody here next to me who knows how to use it properly, and it's a tool that shouldn't be used by yourself. All right. It takes professionals to do this. And so now what I wanted to do is obviously instill an excitement factor that this is a viable alternative for you, but then to talk about some of the other realities of this. And I will start by saying, like I said before, you got to have a couple of professionals in this. This is not something you want to embark by yourself. Work with JaLynn in such a way that she is now your your agent, period. That's it. And it's also very important to have some type of a lender who can go through the qualification process, can look at you as a buyer, not a renter, so that we can make sure that you're ready to go when you're ready to go. All right. So with that said, let's talk, JaLynn, about some of the other little idiosyncrasies, things that can that we should make sure that people can expect or anticipate what's going on. We were talking about the legitimacy or the accuracy of some of the information that's on the website. So let's start there. Talk to me about what they should expect when they go on these websites.
So, one thing that they can expect to see on the website is there are going to be properties advertised on there that may not necessarily be approved for the company to purchase because they are relying on the input of the listing agent, whatever information they're putting into the MLS. And so that's not always going to 100% populate over to the HPA website or the each company's respective website. So one thing I would say, it's always upon the agent, the realtor, to go and do their due diligence. Look in the MLS, look for those agent remarks, make sure it doesn't have any of the property disqualifiers. And there are
Right,
quite a
right.
few that you need to be aware of when you're working this program. And, make sure it's in an approved zip code, make sure it doesn't have leased solar panels, just as an example. So a lot of things that you would need to look out for. So I always recommend that anybody that is looking at the respective company's website, use it merely as a resource for a general idea as to pockets of neighborhoods, price points as far as your monthly rent, price points as far as your right to purchase price on the back end. That's it. Do not rely on it as far as accuracy to the details of the home or the type of home and if it's available and if it's approved.
So let's say that I'm a prospect for you and I'm looking at these places and I see a place and I'm excited about it. My next step then is to email you or text you the link saying, is this property legitimate? And does it fall within the guidelines of these lease to own companies? Is that what I should do, is reach out to you immediately?
Correct. Yes, we will go in and do our due diligence, research that property thoroughly. We will call the listing agent, find out, does it have any competing offers? Does it have anything weird going on with the property that's not listed in the MLS that we should be aware of? For instance, and this is pretty rare, but it does happen, is the property in a 100-year flood zone area? You can go to the FEMA
Right.
website and pull up the address and determine that is not a home that the company is going to purchase because the just insurance is just way too freaking high.
Hmm. Hmm.
So yes, absolutely. I would encourage the resident to send us the property, the address of the home they're interested in. We will check it out and make sure it's viable before we take them out to even look at the home.
That makes a whole bunch of sense. When I had done research on home partners a couple of years ago, there is a very valuable part of the website. There's now multiple companies, and probably, JaLynn, it would be best if we would let people know what other sites they can use so you can list those. But one thing that I found valuable is what properties they will buy and what properties they won't buy. Really, really important. Now, I imagine that most of these lease to own companies have similar guidelines, but they might have their own idiosyncrasies. So, aside from the fact of looking on their maps to find out what properties they think qualify, but they don't, because like JaLynn said, it's only a matter of the accuracy of the MLS data. Um, then find out what the guidelines for making sure that a property fits or does not fit. It's not going to be,
Mm-hmm.
I think this is important to say. You can go on Zillow, for example, and you could say, show me all the homes for sale in Riverside. And you're just going to get all kinds of them, right? You get hundreds of them. Okay. But
Yeah.
then when you go to some of these other lease to own, there's only going to be a small percentage of those because those are the ones that qualify based upon what's on the MLS. So it's important to reach
Exactly.
out and talk to JaLynn
Yeah.
right away with these kind of things.
Correct. But as a rule of thumb, I mean, we're looking for homes that are in a good neighborhood.
Right.
Think about, where would you want to grow up, have your kids, raise them in that type of neighborhood? Those are the type of homes that we're looking for. More turnkey type homes. We're not going to buy a home that's a fixer where,
Right.
the walls are half torn down, that sort of thing. We want to make sure the home is safe and sound. It's in an area that where it's got a good high school where your kids can go to a good high school if they choose to. It's going to be in more of the major metro markets. So those are the basics, and then depending on, I know this is being recorded in February 2023, the current price caps for the company in Southern California are $600,000, which,
Right.
as you and I both know, you can only buy homes in certain areas, like in Riverside County, San Bernardino County, with that price point, right? And in Phoenix, Arizona, the price cap is $500,000. So that's very important to keep in mind. So if you have a client that's looking for $1 million home, this is not going to be a good fit for them because we're
No.
just not going to go there.
No. And that's a really good point. So if anybody does anything, if we've kind of spawned some kind of interest, the first thing that you might want to do is to go to these websites and find out what their guidelines are and whether or not this even fits for you. Because if, like JaLynn says, you're looking for a 5-bedroom, 3-bath place that's in Corona, not going to happen. Right.
No.
So we don't want to set levels of expectation that we can't help you meet. It's so much easier to say, no, this just isn't for me, and not even let you get excited about it. There's a certain reason to get excited about this because it's a perfect alternative, but it can actually blow you out of the water if your expectations are far too high and you're looking for something that is just not within the guidelines of these lease to own companies.
Absolutely. Absolutely. And we've helped so many families get into homes in, Southern California, all the way up to Lancaster, Palmdale,
Perfect. Yep.
Menifee, Temecula, Yucaipa, Riverside, Corona. I mean, we have gotten a lot of families into homes within that price point, believe it or not.
Yep. And I think it's all just a matter of doing the research. You're going to do research just like you would be doing research by buying a home, right? That's what this is all about. If you're going
Absolutely.
to do research, do it with what JaLynn said. And I love this: rent with a purpose. And sadly, a lot of people don't do that. And you're paying your rent. You know the drill. We don't need to remind you. No, actually, we do. You're paying the landlord's mortgage payment. They're the ones getting the
Exactly.
equity. Every time that you take care of your backyard when you're renting and you have no lease to own, or you're painting a wall, or you're making that house better, all that sweat equity, that sweat equity is going to your landlord, not yours. So our participation here is to make sure you stop doing that by renting with a purpose. So
Yeah. Stop the
JaLynn is,
insanity.
yeah, stop it. And I think that that's kind of like the entire message that we want to be able to give here. JaLynn, is there anything else that you feel that you want to do to excite some of these people and maybe pull them in a little bit?
Yes. So on that note, I wanted to let everybody know that I am putting on a free 30-minute webinar via Zoom every Friday morning at 7 a.m. Pacific Standard Time. And so if you are a real estate agent or a lender, whoever you are listening, and you're interested in learning more about working lease options, or just want to know more about lease options in general, you are more than welcome to sit in on my free webinar. At some point, I'll get so good at it, it will become evergreen and it'll just be on autopilot. But for now, it will be recorded live. It will be live.
So how do they reach out and find that information?
So I can send you the link if you like to send out to anybody inquiring. Outside of that, you can find me on all of my socials. If you just Google JaLynn Manser-Shaw, I believe that a lot of my socials will pop up. I'm on
Yeah.
YouTube, I'm on Instagram, Facebook, Yelp, LinkedIn, I mean, you name it, I'm there.
Well, what I'm going to
However you
do
guys want to
is,
reach out to me.
yeah, and what I'm going to do here is on this page, on what you're looking at on the screen, I will make sure that there is a website. So and that
Okay.
will be on the website, on the page, on the recording from the very beginning. So people will have an idea of how to get in touch with you on this one. Let's see.
Perfect.
I think that that's really about it. If you have any interest in this, JaLynn is the go-to when it comes to the agent answers, when it comes to the mortgage, the payment, the finance questions. I'm immersed in this from a lease to own option idea as well, and I can help on that side. So you're looking at an awesome team here. And JaLynn,
Thank you.
really appreciate working with you. You are such the rock star. So thanks for everything that you've done
Hey,
here.
hey, John, I just wanted to take a minute to talk about you real quick because I think it's very important for people to know how awesome you are as a person and how awesome you are to work with as a lender. And you have this crazy good program, especially for people out there who have a lot of income. They might be good on the asset side. They just don't have like stable income per
Right,
se, right?
right.
You have a program where you can get them financed literally off one page of a bank statement, and that's it. So I think that's important to throw out there for somebody who is maybe a little bit creative. They're self-employed, right? And they just can't get financing because of the instability, right? Like reach out to John, you guys, because he can
Thank
get you
you.
financed.
And
You're
I think that the
welcome.
reason that JaLynn can say this is because she is so dynamic and she's so smart with her money that she's got lots of money, but she tends to not want to be able to expose her share of the bank or the bank's, sorry, the tax returns and these kind of things when it's easier for her to put 20% down. So she puts it 20% down. She doesn't have any of this kind of stuff. And she's done multiple transactions using this. So she knows what she's talking about with these kind of programs. But JaLynn, I really appreciate that. Thank you. I mean, it's
You're
something that
welcome.
works and you've seen it work.
Exactly. I've seen it work multiple times. I love it. I think it's the best thing since sliced bread. Like I
The
like to tell
best.
everybody about it. Like seriously, whenever I get somebody that's like, oh, I've got the money, I just don't have the income stability or like the income history
That's
stability, right?
right.
I'm like, hey, I've got a dealio for you. Check it
Yeah.
out.
Whether you can't show the income or don't want to show the income, as long as you got 20% down, you're able to buy a house. So it's
Yeah,
pretty.
and that's credit score requirement right now. Is it refresh my memory? Is it like
It's a
650?
640 that you
640?
need, and it's the 640 you need reserves, but the reserves need to exist. They're not used. They can be in retirement accounts, they could be in stock, these kind of things. So the fact of the matter is that's one of the other requirements, 20% down and a little bit of reserves. you know?
That's it.
So
Easy,
that's
easy
it.
peasy.
Well,
Easy
here
peasy
is
Japanesey.
23 minutes that we have squandered of yours, and you will never get back. Hopefully, you're going to take this and go, oh, goody, 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 goody. I'm going to go reach out and I'm going to talk to JaLynn,
I
and
am.
we're going to buy a house. We're going to rent with purpose. JaLynn, thank you so much, lady.
Thank you, John. I appreciate it. Have a
Talk
good
to you
day,
soon.
everybody.
Bye-bye.